The New York Fed released its quarterly report on debt, and it is grim. Net household debt rose to $17.3 trillion, an all-time high, led by mortgages, credit cards, student loans, and car loans. That's up $200 billion from the previous quarter, so about $2 billion per day. And it brings average household debt in the United States to $132,500. The surge takes mortgage balances to just over $12 trillion. It takes credit cards to nearly $1.1 trillion. That's up nearly 5% on the quarter. Home equity loans rose by 3%, and car loans made up another $1.6 trillion, continuing a 12-year uptrend. This puts household debt up 21% in just the past 3 years. At that pace, it would double household debt every decade, so that 132 would become 265,000 in debt per household. More concerning, the Fed says delinquency rates are rising on everything outside student debt, which is currently in legal limbo. Credit card defaults jumped from 8% to 9.4% last quarter. That is the highest since the peak of the pandemic. And as my colleague E.J. Antoni pointed out, that's the fastest rise since the 2008 crisis. For perspective, on the very eve of the 2008 financial crisis, credit card defaults were at 9.5%. Today, they're at 9.4% and rising fast. Credit card delinquencies, as you would expect, were worst among millennials and those with auto loans. This is because average car prices are hitting all-time high at $47,000, which is up 20% in just 3 years. Meanwhile, even with good credit, that debt is costing 5% for a new car and closer to 7% for the average used car. As a result, nearly 1 in 5 car payments are over $1,000 a month, which is also a record high. In essence, the car payments are eating the credit cards. You need a car, after all, to have a job. If you don't have a car, you don't eat. But with average credit card rates running 21%, that puts people on a treadmill they can't keep up. A few weeks ago, Bloomberg ran an article on car owners doing just that, falling behind on payments, which is the final stage before delinquency, at record rates. They noted over 6% of car loans are at least 60 days past due. That's the highest since data began. This implies America's leafy suburbs will soon be invaded by an army of repo men. Cox Automotive estimated 1.5 million cars will be seized this year, which is up 20% from last year. To give a flavor, the article profiled one borrower in Denver who makes $17.50 an hour, but pays nearly 14% on her truck while floating $20,000 in credit card debt. She looks out every morning to see if the truck is gone. So what's next? Brought to you by Unchained. What's next is with debt soaring even as real incomes go down, millions of Americans are falling into a debt trap. In a recent video, I mentioned the supposed blockbuster GDP numbers built on household debt. With inflation now rising again and jobless numbers grimly trudging up, people are going to have a harder and harder time staying on the treadmill. Many will fall off and lose everything. Okay, we'll be watching. See you next time.